Alright, what's up guys? This is Max, aka BALLIN Trader, aka Polite Humble Trader Larry, and we're gonna do some weekly forecasts. It's something I want to do every single week, every Monday. I kind of want to give you some key levels to look out for, kind of some predictions for the week, and basically help y'all, understand some things that I think are pretty cool that I've seen in Bitcoin that I've learned from, people that I choose to learn from, really smart people like Inner Circle Trader, Chris Laurie, a bunch of books that I read by really smart people, and, some original stuff too that we will get into possibly. Right now, I think the big thing on my mind is this market profile, the four major market profiles that was taught to me originally by the Inner Circle Trader. Basically, the market's always going to be trending, and then it's going to reverse, then it's going to retrace, and then it's going to consolidate. And this consolidation right here, that is where the money is made, because that is where smart money pairs orders. If we think about the mechanics of the market profiles, basically, by very definition of a trend, most people are going to be trend following. That means most people, in this case of a downtrend, most people are going to be short at the bottom. And, that's nothing against, traders. That's just, if you're selling here, price goes down because no one's buying, then you're selling here, no one buys, then you're selling here, then, everyone's fucking selling. And this is where, all the selling takes place. Now, on the flip side, that's going to get way out of whack. It's going to get overextended. And then the people that start selling here, once that goes against them, they're going to, fear taking a loss. So basically all these people that are short up in this range, as price is going up and going against them, they're going to want to lock in profit, and they're going to start closing out orders. So they're going to start exiting the market. When they exit the market, well, price is going to go up, number one, but most importantly, they're going to be neutralized, which means they're going to be taken out of the market. And the same thing is going to happen in the reversal profile. People are buying. When that reversal profile happens and the trade starts to go against them, traders are going to be neutralized here. They don't want to see the position go against them. So they're going to close their orders. They're going to get out of the market. And they're neutralized. Now we're going to settle into the consolidation phase. And so yeah, the consolidation phase exists because basically the sellers here are out of the market and the buyers here are out of the market. And you can just kind of settle in to this nice equilibrium. Equilibrium is a pretty big concept that we should talk about, but for now we're just talking about the consolidation. What's going on in the consolidation is that smart money is pairing orders. Why are they pairing orders? Well, because like I said, people down here, people up here, they've been neutralized. They have to get back in the market. Smart money is the money that moves the market. They have more money than you and I, 100-fold over. So they have to do their business when markets consolidate. Smart money cannot operate when markets are trending or when they're going up very fast. So that's why this is a very exciting time, because right here where we're consolidating is going to be the origin of our next trend. So this is going to be the top or the bottom right here of the next 100-point, multi-week long price move. Where's my brush? So we said market profiles were trending, reversal, retracement, and then the consolidation. Well, it's a cycle, it repeats. So we're looking for a trend. And so the most important piece of knowledge about, I guess the most strategic decision you can make out of knowing the four market profiles is that smart money is accumulating a shitload of orders, and a bunch of people right now are getting paired up with the wrong side of the order. So as the market is going to start going against most people, that's going to be the catalyst that's going to drive the market violently one way and kind of, launch it into a trend. So for example, say you have taken a long position at 225, you think it's, a good position to take a long. A lot of people do, apparently, according to the sentiment indicators that are going around. So if you're long at 225, if the market starts going down, you can only let it go down before you turn into a seller. And as the market continues to go down and down, more and more people are selling, getting rid of their longs, and they're also going short. So why is that important? Because basically, once we break out of this consolidation, well, we know we're going to enter into a trend. That's just how the four market profiles work. But now we know why. It's because smart money has paired so many orders against the masses that when the trade finally does decide to go in one favor, there's going to be a mass exodus out of the losing position, and that's going to create a huge flow of orders entering the market as people try to mitigate their losses. So what we want to do in these consolidations is we want to look for clues that people are buying or selling. We want to look for the footprints that smart money is leaving behind to indicate to us whether they're buying or selling. So what do we look for? We're looking for market structure. We're looking at the highs and the lows. We're looking at probably lower time frame type stuff, but we want to frame it on a higher time frame type basis. So, obviously this high is pretty key, and obviously this low, these two lows are pretty key. And that's pretty much all I'm caring about right now, but I guess I could get deeper into this equilibrium concept that ICT teaches it, but I feel like this is a pretty powerful concept and something I'm really excited about. Basically, I'm going to draw this line, and actually I'm going to get rid of these lines because it's just too many lines. And this box kind of denotes the range we're in right here. So we don't really need it. And so basically, right here, we are looking at this box. This is where all the price action is occurring, right? This is where the majority of the price action is occurring. So we know right now this is an area that is attractive to the market makers, because like I said, or like we said earlier, market makers can't really fucking do business up here. There's probably probably took 500 coins to go up here. Market makers have way more than that, and they can't operate here without slippage. Here, this is very liquid, and they're operating without slippage. They can pair thousands of orders up here and accumulate a huge position. So we can see that this is like an equilibrium in the market. And I haven't really planned what I'm saying, but this is kind of interesting. We can see this high right here. We can see how the equilibrium kind of works, where let's do a ray. So basically, this is a swing right here, and there's just symmetry in the market such that you'll get an equal and opposite swing in the other direction, and that is based around the equilibrium. As you can see, price is here, it reacts here, kind of reacts here. This is kind of like an equilibrium in the market on the more shorter term. And I actually made a chart on TradingView that kind of called the high within like $2, and it was based on using these concepts. So I'm not just pulling that out of my ass. It's like some real shit. So this is what we're going to do to set profit targets combined with higher time frame support and resistance. It's pretty simple stuff, and that's how I'm just going to predict or project where price might go should we see some different outcomes for this week. Okay, so yeah, I was talking about the equilibrium. As we can see, boom, price reacts here, price reacts here, price reacts here, price reacts here. Price is reacting at this 225 level, and I would consider this the equilibrium. I would say 225 is the origin of where the next move is going to come from. Interestingly enough, so this is kind of like 225 in the past has been the origin of this huge move up. So if we kind of measure this swing, that's going to give us a target of 136. And if we move out to the weekly chart to look for some confluence, that 136 is, you know, you definitely want to be taking profit at 136 should price ever see 136. It's just, there's just a lot of support there on the weekly chart, very strong support, and it's kind of like the 100% extension of the move up from 225 to 300. So that's one target that I have in mind. Another target is if we kind of look for another equilibrium, we see this could be considered an equilibrium, and let's just get rid of this. I can't click. And this is kind of like the origin of that move. And wait, 100. No, this is the origin. Right here. Alright, so this is the low right before it goes pretty violently up, and it's at 92. 82 is the Silk Road crash low. It's also support and resistance on the weekly chart. So I would say 88 and 135 are key levels that we're looking for on the downside. And then obviously we're looking for, you know, this is, it lines up with the 127. It's the double bottom, which is probably going to get some dip buyers. This is going to probably attract some dip buyers. But if we do break out, okay, so I should probably zone in, stop talking so long term, because this is the next couple days what we could expect to see. Let's take back our equilibrium. I don't know how this video is going to turn out. This is like unplanned, but I'll get better. That's part of the reason I'm doing all this shit, is so I can get better, like expressing my thoughts. And you know what I mean? So it maybe help someone out in the process. So I don't even know what I'm talking about anymore. But okay, yeah. Okay, I know what I'm talking about now. So we're on the 4-hour chart, and basically what would signal to me, what would be the nail in the coffin for the bulls? And by that I mean like the bulls would just be absolutely destroyed if we broke these lows. Boom. And what's going to happen is a lot of people are going to think that this is a stop raid, and they're going to buy here. And this is also at 200. So I could see us just going sideways for a while. And there will be a lot of buyers there. I mean, right now, even if you check the sentiment right now, I think it was like 86% bulls. That's a sweet looking 8, by the way. But I think it's like 86% bulls. And look at what we just did. We just took out a low, you know? People just love fucking going bullish when shit looks bad. Anyway, the nail in the coffin would be taking out these lows. That would be a huge market structure shift. And basically, the reasoning behind that is that we're talking about consolidations. We're talking about the deep pockets that are accumulating orders. Price is not going to go down and take out these lows if they're trying to go long. They have so much money, they can't hide themselves. It's pretty obvious that when price goes down, it's because there's a huge force at play that's pairing orders, and they're taking the side of the trade that's going to send the market down. Even right now, you can kind of see in this equilibrium how price is looking heavy. And, you know, obviously some people are you're going to see these charts, and shit's going to go like this, and it's going to take out this kilo, and they're just going to call this a stop raid, right? And they're just going to be like, oh, we're going up here, right? But it's all unnecessary, dude. Technical analysis for the most part is stupid. You just gotta understand how the market makers are working. And yeah, so if we take out these lows, then we're gonna see 135 or possibly 88. I would project something like this. If we were to take out these lows, I would say we would come back and retest, you know, the bodies of these candles. at 220. This is really sloppy and shitty, but so say we take out these lows, I would imagine we retest, support turns resistance, and then ultimately go down here. This would be the first part that I would look to take partial profits at, and then we would retrace, I would say, into an OTE, 62 to 79% retracement, and then we would, break that, and then we would be looking for our 135 profit targets, and ultimately maybe saving some for 88. 88 would probably be, I would not be short at 88 at all. That's just fucking crazy prices. But it's possible in the next coming weeks that we'll see 88. To the upside, to be honest, it's harder to make a case for the upside, but I'm kind of feeling bearish right now. But what would do it for me is, this high getting taken out. So this is what ICT would call an intermediate term high. And basically an intermediate term high is when you have lower highs on both sides in the market. Okay, so I can talk about this. This is cool stuff that just came up. Basically, this is your intermediate term high, so this is like a key area in the market. We don't want to see this broken if we're a bull. If we're bear. If this were to be broken, we would, immediately reconsider our bearish outlook and probably be bullish. But the thing that I've recently learned from ICT, just from his like casual Twitter comments, is he was going over stop rates. And I know a lot of people love stop rates in Bitcoin. I don't really believe in stop rates in Bitcoin because, at least I don't believe in stop rates in Bitcoin on like an hour, 4 hour, or 1 hour chart. Certainly, I think on the 5 and 15 minute chart, it's very easy to, stop rate the 20x margin OKCoin casino traders. But on the hourly and 4 hour chart, it's very rare that you see stop rates. And stop rates are more geared towards a more liquid market, more higher volume. And really, when you're on an hourly or 4 hour chart, you're not really seeing stop rates that often. So, like I said, this is probably, if we go down here, that's probably not a stop rate. Even though there are a lot of sell stops that will be triggered here, just longs getting stopped out. It's just, Bitcoin is an illiquid market, and it just doesn't do the people in charge of the market very much good. Most of y'all people don't even use stops anyway, so what are they rating stops for? What is the daily volume on Bitcoin? Maybe a couple $100,000. So if they have like an hourly intraday high up here, what is the value in getting the market up here? How many orders can they really pair up here to send the market lower? So I find that stop losses or stop rates are really overused in the Bitcoin market, and I'll do a video on that, comparing like the Forex market, which does trillions of dollars a day, compared to the Bitcoin market, and you can really see the difference. Stop losses are not a concern for me in Bitcoin, which is why I feel like it's the easiest market to trade. But how stop rates do form is exactly like this. They are multi-day, long-term things, and long-term moves that just go straight retarded, and they take out, key highs. So this is obviously a key high, and it runs back into this consolidation zone where this whole shitstorm started. So this is probably a stop rate, and obviously the Coinbase pump, people were trying to get price, stick it up way high and trying to get it down, is what it looks like. And what ICT told me, taking me a long time to say, probably being too verbose, but that'll get better anyway. What ICT says is that when you see a stop rate, you don't want to see the price do a healthy retrace, because a stop raid, by definition, okay, let's look at what a healthy retrace would be. A healthy retrace is right here. This is the optimal trade entry as determined by ICT. 62 to 79% retracement. You don't want to see price get up there if you are going to be bearish. So if you're bearish from 300, you don't want to see price get up here, because what's happening here is people are driving price up to an insane level, and they're just taking all the liquidity here. And this is 300. This is a big figure. So you know there's a shitload of people just shorting into this, and they think that they're going to be protected by 300. And, you know, they get all taken out, of course. And so what happens is market makers pair all the orders. So they're short from up here. They don't want to see price get back here. And if price were to, like, you know, healthily retrace back up here, damn it. If price were to healthily retrace and kind of, you know, do all this shit and go up there, it would be a bad sign. It would be a sign that possibly that, oh shit, it would be a sign that, that 300, the parabolic move to 300 was not reversed. However, what's happening here is, you know, we hardly hit the 50% retracement. So this looks like a blatant stop run, trying to just get more short orders paired from a higher price. That's what it looks like. When price can't retrace, you know, even 50, 70%, that's pretty dangerous. Likewise, we see that on an even smaller scale. On Bitfinex, an interesting thing occurred. I don't know what happened, but apparently some guy was in the chat talking about how he shorted, you know, 2,000 Bitcoins or something. And he got squoze right here. And this is the same concept. I'll see if I can explain it a little better this time. But basically, right here, some dude, you know, got squoze for 2,000 coins, and it went up, and it never really retraced. So what's going on here? Well, this is an ICT order block, you know, bearish order block. Price went straight up into there, and it never retraced. And let's do, yeah, I mean, it retraced, I guess it almost retraced to the 62% level, but it never really spent much time, you know, in a healthy level. It just popped up and then went back down and then made even more lows. That's pretty dangerous, and it's a sign that the market makers kind of shot price up. And, you know, I'll show one little thing, another bearish case, but it's really not a coincidence that, can I delete this, please? Please? Let me delete, alright, no, wrong one. It's not a coincidence that this major swing right here, you know, bearish order block, 79% retracement level, boom, squeezed it up there, and it never came back, you know. So it's like I said, and it's the thought that I want to get in more people's heads is that in consolidation, smart money is preparing the next $100 move, and they leave footprints. Price is looking very heavy, right? I mean, it's just too picturesque that price goes up here for like a split second and then gets slammed back down. That's not indicative of a large force buying. That's indicative of a large force kind of manipulating price up higher so that they can sell for the highest price possible. And you know, I wish I could have explained that better, maybe, and it will get better. But basically, it is what it is. And that's kind of, I guess, where I'll wrap up. I think I said everything that I want to say, man. I mean, it just looks, the market looks heavy. We're at this 225 equilibrium. That I've explained the equilibrium, and I've explained the, you know, the fib extension. You don't even have to do fib extensions. If you don't understand the fib extension, all you got to do is say, well, this is the equilibrium, and this is the magnitude of the upswing. So we're going to see an equal move down, right? And assuming that this equilibrium breaks, and I think this equilibrium would be confirmed broken down if these lows at 210 got taken. But conveniently, and you can see like the market symmetry, you can see that it matches up with a weekly support level. You definitely want to be taking profit at 135. But what else was I saying? I don't even know. I should probably do upside objectives just in case we do break up. Oh no, I know what I wanted to say. I mean, if we're breaking down, it's going to take some time, in my opinion. And I actually wrote about this on my blog. I should probably link to my website. But it's basically, this is the distribution phase. It's the consolidation phase, whatever you want to call it. Accumulation of positions. What's going to happen? And I've already said this, but I mean, I'm not pulling this out of my ass. It's actually real shit. When the market makes lows, you can actually see 80% of the market will be bullish because people kind of blindly buy into bearishness because they think that that's a good thing, and it is sometimes. But you gotta do it smart, you know. So I think, like I said, like 86% of people are bullish right now. Like 86% of people have bought within the past 6 hours. Well, the past 6 hours we've taken out a low on the 4-hour chart. Actually, let's zoom in what we've done on the past 6 hours, and let's see what people are thinking. Basically, wait, this is okay. Never mind. Let's go to a 1-hour chart. Basically, this is what we've done, and this is people are getting bullish on the break of this, you know, kind of intraday low. So, I mean, I could explain what's going on here. Basically, this was last night's trade, and this is actually where I started scaling in on a short position, and I am short a little bit, but I think I'm not in a rush to build too big of a position because I think that we will just go sideways for another week or so because 200 is a psychological level. It's going to be okay. So what I was trying to say is dip buyers are going to come in the market, right? People go bullish when the price goes down irrationally because they think it's value or something, especially when we're sitting at a big figure like 200. People are going to buy that shit up all the time, and I wrote about it in my blog that this is when you want to trade because it's such a forgiving time because the retail traders are going to come into the market and they're going to dampen the selling pressure or the buying pressure if we were to go up. But as price moves down, retail traders are going to value buy that. They're going to buy the dip, and that's going to dampen the movement. And you're just going to see price kind of dilly-dally gently downwards until there's no one left to dip buy. And market makers have paired so many orders that you know, something's going to break. And that's what I think, you know, is going to happen this week. I don't expect to see lower than, you know, to test that last bottom we made, 160 on Bitfinex, I think, 180 on BQCE. I don't expect to see lower than that. I really wouldn't expect to see lower than, you know, if these lows here, 210 got taken out, we might see sub 200, but then the dip buyers would come in, like I'm saying. So this is kind of like everything is fractal that I'm talking about. So I could talk about how I got short last night. Basically, this is a low. This low got taken out. This is the equilibrium that I was talking about, and we see we're under the equilibrium. We take out this low. Where are we coming from? You know, this whole consolidation got taken out. Supports turn resistance. Then we take out the low. Then we retrace, and we retrace into a optimal trade entry, an ICT optimal trade entry. Shouts out to my boy. You know, 79% confluence with our little intraday support resistance right there, and then we trade lower, and then we break these lows, and then the dip buyers come into the market, and I suspect today we're gonna see lower prices. I think this week we will break the 210, and I think this week we will get a clear exhibition of where we're going. It's probably not the right word. We'll get a clear sign. We'll get the type of sign that you can, put a lot of risk on, make a lot of money on. And that's it, man. I wonder how long I've been talking. I hope I haven't been rambling too long. Like I said, these will get better, and that's what I'm feeling, but can't leave you just yet because I haven't given the upside objectives. Upside objectives would be 300, man. That's an equilibrium. You can check my trading view. I've done a lot of trades around this 300 level as an equilibrium in the market. Basically, if you were to, you take this high and this low, right? 50% or the equilibrium, the balance point is 320-ish, and that's right where all this price action is occurring. So if we were to take out 250, we would be seeing 320. And before that, obviously, wait, hold up. Obviously, this is a good profit target, the last bubble high. That's always a good, profit target that has been respected by the market in the past. So, yeah. So I would say, damn, is it 284 in Bitfinex? So yeah, I would say if we take out this high, then we'd be looking at 284, and then we'd be looking at 320. And there is a huge move. If we broke up, dude, there's a move up to 450. But obviously, $450 Bitcoin is pretty expensive considering Bitcoin is pretty useless. But that's for another discussion. But yeah, man, I hope everyone does good trading this week. I hope everyone subscribes to my shit, checks out my trading view and my website. And yeah, I hope to just get better at putting out good content. And I don't really plan on charging for anything, so I just want to talk about it. I kind of just want to build a community of people that, want to learn some real shit about Bitcoin. They want to, and it's not even that I'm a teacher, it's just that I want to build a community of people that are eager